Weekly Market Pulse, discounting the future. The economic news recently has been better than expected, and in most cases just pretty darn good. That isn't true on a global basis, as Europe continues to experience a pretty sluggish recovery from COVID, and there was a lot of very good news in the household report that more than offset any disappointment. In the number of jobs part of the report, the 10-year Treasury yield fell 10 basis points on Friday after the payroll report. The movements in bond markets today are not, mostly, about the economic data being released today. It is obvious, though, that if investors are buying 10-year Treasuries at a big negative real yield, their expectations about future growth aren't very good. I have to say, though, that assuming economic harm from the end of QE requires a more positive view of the impact of QE than I can muster. That isn't necessarily negative for the rest of the global economy, just as the end of Japan's boom wasn't. But it adds an element of uncertainty that didn't exist until recently.